the end of the music means it's time. Welcome to Trade Masters. I am Coach Old Money Holmes with my good buddy Tyler Craig here tonight. We're gonna have a little different format tonight. We're gonna judge each other's picks, so this should be fun. Of course, we'll have some tasty jokes and some tasty picks, and we'll just have a little bit of fun with this. How you doing tonight, Tyler?
Doing good, Greg. Yeah, good intro there. Special edition. Mark is not here. We kicked the judge out of the judge's seat, and Greg and I are feeling judgy today, so we're just going to judge each other. Yeah. So Greg's got 5 picks as usual. I'm gonna find 5 picks as well, and so we'll go back and forth. And usually the contestants defer to the judge and don't really hate each other or talk smack, but this time, yeah, Greg, let's see what you got, and then I'll take it as much as I give it. So you feel free to be honest and forthcoming and frank, as if you need the encouragement for that in your feedback.
Yeah, absolutely, and you as well. It's always it's about having fun anyway. So the picks and the banter are what keep us coming back. So. I'm gonna go soft out of the gate here. I don't want to spook my buddy Tyler here, so I'm gonna run over to IWM. A little ETF action here. Obviously, we're still going through earnings season. This is one of the biggest weeks for earnings. Apple, I think, is today or tomorrow. I think today Apple was, and you got Google tomorrow. You've got just a massive amount of companies reporting this week. So obviously that's going to mess with your process a little bit. And that's where our friends, the ETFs, come in handy here. So IWM, obviously it's a surrogate for the Russell 2000. Little recovery from kind of a pretty solid beatdown it had, basically the end of last month there. Come back right up to this level of resistance here. You can see I've got the 229.50 marked here. That's right where the level of resistance was over here. It's right back at that space again, that zone, if you will. I like this. It's starting to show some resilience. It could just stay in consolidation, or we could have a broader push up. But regardless of which way it decides to go, there's definitely a trade here in my mind. So go through the technicals, and then I'll talk about how I want to play this. So for me, the break of that 229.50 would be the trigger, the entry. First target would be about 235, 234 and a half, 235. So you're a little more than 1 ATR away. So it's a 1-to-1 on your first target. My second target, I fully expect this thing to get to the 240 mark pretty easily. Just you've got a $4 ATR here. So once you get past this clear high back here, there should be no reason for it to slow down until it gets to a round number. Okay, so 3-year weekly, we can take a look at that real quick. As always, good practice. You can see what I'm looking at here. It looks almost identical from a weekly, right back at that level that it was before we had a couple of candles push above it there. So really showing some solid strength here, riding a 9, staying, even when it got punished on a weekly, it stayed above the 20, which is good, and all the moving averages moving in the right direction. So for me, this was pretty simple. The way I looked at this, let me see if I got the right one here, is I just wanted your garden variety bull call spread. So what I was looking at was the 230. So buying into the 230 for June, by the way, 230 and going out to the 240. And you're looking at about a $421 per contract there. If we go to the Analyze tab here, you're going to see that we're risking if you don't use a stop loss, you're risking 421 to make about 579, 580 there. So the risk reward setup's decent. Like I said, I really like the chart. What I would do, the way I would play this myself, is I would actually keep a stop loss here. I wouldn't let it go all the way down. I would want to get out if it broke these 3 moving averages here. somewhere in the neighborhood of the 225, 223 level there. So just your garden variety bull call, nice setup, starting to show some strength here, getting through earnings season. This doesn't pose any problems for us whatsoever in that respect. So that's my first pick.
All right. Look, I own IWM. I love small caps, and I do like how this is shaping up. Maybe we're being presumptuous here. I mean, maybe I'm just like scared of my own shadow, but I'm like, man, this looks so gorgeous. It's got to work, right? And it's like, no, S&P is a little exhausted. You know, this breakout's going to fail. Then I'm like, nah, don't second guess it, man. Just go with the chart. And I agree with you. Small caps have been very pretty. And you know what I like about where IWM is at is energy was waking up today. I'm sure you and I will take a look at something in the energy space. I like how that's bubbling higher. That's going to serve well for IWM, which tends to move somewhat with energy stocks. Financials have been doing well. Commodities are heating up again, right? Your FCXs of the world, the cyclicals. Yeah, I feel like this is in a pretty good spot. I do like bull call spreads as a way of playing it. It's a lot cheaper than a long call, a little more leverage than a long stock. And I think at 230, 240, the strike selection is fine. Paying $4 is fine. Yeah, I don't see any problem with it. Where would you put your stop loss?
So my stop loss, like I said, ideally I'd like it down. Obviously, I'd prefer it down below all this noise. But 220 might be a bit of ways away. So if I looked at 220 here, yeah, 220, you'd still only be risking $1.50. Okay. So your risk reward would be solid there. That's ideally where I like to go, is below the noise. You know, so and with that being down at the 220 there, you're below all three moving averages, which are kind of coiled up. That's one thing I didn't mention as well. The coiling of these moving averages, that sometimes dictates a very big move. So if this does break out, I could see us getting a little push out of that too as well.
Sure.
So
yeah, and one other thing I think I could point out from a technical perspective is I like the failed support break that came before this. Like it tried to break lower, buyers came right back. To me, that's a pretty good tell. I think it adds fuel to the upside. Because anybody who got shaken out is feeling like a schmuck and likely to chase it higher. And then anybody who shorted on that support break is feeling the pain and likely to run for cover. So I think from a technical perspective, it looks good. All right, I like it, Greg. All right, you got to. I'll give you mine, and then we'll go to your joke.
Okay, sounds good.
I'm going to, you started with an ETF. I will match your ETF. Let's take a look at utilities, XLU. XLU. Okay, Greg. Greg's job is to talk me out of this. You're the bear. Yeah, you're the bear on the bull. I like this bull retracement. If you want to zoom in just a little bit, maybe 6 months. I like this look here, Greg. Utilities had a very, very big run for the last 6 weeks. This is the first legit bull retracement that we've seen. We're settling right between the 20-day moving average and the 9. This is a logical area where you'd think buyers would step up. So from a technical perspective, I think it's fairly orderly. I don't usually get excited trading anything utilities. I'm kind of predisposed against utilities for the simple fact that they're boring. They don't have a lot of volatility, which doesn't lend itself towards the type of strategies I do. But I like the chart, and I feel like I can build something on this. I also like the fact that we don't have any earnings reports. So my initial thought when I look at XLU is that the implied volatility, Greg, has actually popped over the last 6 weeks. The IB rank isn't that bad on XLU. And so I have to double check and say, well, on the one hand, I know premium usually sucks for utilities. There's not much juice in the options. On the other hand, we got a little bit of a pop in volatility, so maybe there's something there. And so I'm actually, so here's the thing. I have not built a sample trade on XLU yet, okay? So you guys are seeing you're seeing how the sausage is made. I may pivot here in a second, but I'm intrigued. I at least want to see what a bull put spread would do. So take me to June, because I think May is going to be tricky with 23 days. Let's go to June, Greg, and let's go to, let's build a bull put, see if there's anything there. If not, we're going to pivot. I think you'd have to do the 63 strike. 63 strike, and then I would probably do, let's see, either a $3 spread, Greg, or a $4 spread. 4 is okay. 63.59. 63.59. Okay. That's not bad. $4 spread for 50 cents. Take a look at the chart and tell me where 63 is. Down around the 50-day moving average. Down around the 50-day moving average.
Just below it, yep.
Yeah, it got a couple support levels, little pivot lows and old resistance between here and there. I don't mind that trade. I don't mind that trade. So idea number one on XLU is going to be June 63.59. You could even do 63.60 if you want a little lower cost. Bull put spread. I don't mind that trade. I don't mind that trade. I don't think you're usually able to go $3 out of the money on XLU and get a decent ROI on a bull put. So that's idea number one. Idea number two, I won't build the trade, but I'll just suggest it. If you didn't want to do the bull put route, I would do a bull call diagonal or a poor boys covered call. I would buy a June in the money call, sell a May out of the money call. I think that would be a decent trade structure if you're willing to go a little bit more directional.
Okay. So I'm going to try and talk you off the ledge here. I don't mind the trade, actually. My only concern that I have really is where do you trigger here into your trade? So obviously, if you're doing the bull put, the trigger's not as crucial. Do you wait for a confirmation candle here? Do you get right in? Now, if the bull call, does that change things for you? Do you wait until it gets above the high of this doji candle today? Or do you wait until you get maybe a green candle here tomorrow, knowing that this thing doesn't move that fast? I really like the poor boys cover call or the diagonal idea of that. And I like that for the fact that, you know, when I'm looking at doing diagonals, I want things that move somewhat slowly, but in that general direction, which this has shown since back in early March there. It's just kind of creeping along, making you money, making you money, making you money. So I really like that idea. Looking at a longer term chart here to see where this can go, you know, obviously 70s in play, and you know, and beyond for that. You know, that high was back in February there. So I do like the trade. Like I said, my only concern here, and this is my tendency as a trader. I like to get some confirmation, and I do want to make sure that I'm above that 9 EMA. I don't want that to act as resistance. You know, typically I find that the 20 does that more, but you know, I don't want a moving average slowing me down. So I would be happy if I got into it above that. But I do like the trade setup overall. Don't really have an issue with it. And I love the fact that it's a ETF, and you don't have to worry about earnings. You can get into this trade quite quickly, and you're just not running into any of those problems. So good trade. Like I said, my only thought would be, where do you trigger at time?
Yeah, and to follow up on that, this is contingent on a trigger. What I like about the pullback is it's clean. We consecutive red bar, red bar, red bar, red bar. I mean, 6 straight red bars. It's nice and orderly. And so that makes it easy for me to say, look, if it breaks the prior bar's high, that interrupts the sequence. It signals it could go higher. I wouldn't mind if somebody said, hey, I want it to go a little bit further above today's high and get above the 9 EMA. That's fine. But yes, I am looking for a trigger. If this has a red bar again tomorrow, I would wait. So the setup is there. It has not yet triggered. But Greg, as you know, that's when you want to set the trade up, right? You want to anticipate, build it, and then if it triggers, go ahead and enter. So yeah, good feedback. And
it's got the doji there, right? It's got the doji right on the 20. So that's the key right there. It's the indecision that we get from the doji that says, okay, yeah, this could be a potential setup, right? Had it not had that doji and had, you know, a similar candle to the day before, showing a little bit more weakness, then at that point in time, you might have expected that it comes down to another support level. Now, the one thing I did like about your bull put idea is look at this support at 64 here.
Yeah.
So resistance, actually resistance way back here, resistance here, resistance here, resistance here. Now support there. Yeah, I think you'd find some really good support at 64. So if you get down to that 63 on your bull put spread, yeah, I really like that. I like that setup. You'd have to have a pretty strong event, I think, to break through that 64. So good job.
I agree. Awesome. All right, give me a joke.
All right. How do you get a philosophy major off your front porch?
I don't know.
Pay him for the pizza.
Do you want to explain that to the crowd for those who didn't get it on the first pass?
Yeah, for anybody that's not getting it, obviously taking philosophy in university, doesn't always translate to very high paying jobs, and so being a pizza delivery boy would fit that bill. So a little slag on the philosophy majors there, but
hey, I appreciated that one. That one.
All right.
What's the next pick? What do you got?
Next up. All right. I've actually got a few to choose from here. Actually, I'm going to go to we talked about the energy space, so I'm going to go there now.
Yep.
So we'll quickly look at the XLE here. This thing looks exactly like the crude light chart as far as I'm concerned, which we will also look at very quickly here. Looking kind of a little false breakout yesterday. Today. I apologize. That's today's candle, or tomorrow's candle. So a little bit of a pop, kind of come back right to that space there, but it's really showing the strength. We've talked about this for a couple of weeks now. Higher highs, higher lows in this nice little channel here, just waiting to pop above that 64 and go. So what I found here was something that I thought was very interesting was ConocoPhillips here. Okay. ConocoPhillips kind of took its medicine, has rounded out a bottom, and has pushed, last 4 sessions in a row with a big strong candle today, right to where that 50 MA is. Okay, which also happens to be a double top here from a couple of weeks ago. So we got a double top here. I think this is making a turn. You can make the case that the reversal has proven itself, and you start connecting a few dots here. It's proven itself. You've got the turning of the moving averages. Now, what I like about this here, and I see this earnings thing is here, so I'm not really sure when the earnings is. This really doesn't matter that much to me about the earnings. I've kind of looked at them recently, and it's not something I'm too worried about. But I don't know why they always have these things split up like this. But anyway, the point being is what I like here is you can see that I've drawn 3 lines here. Okay. These are potential resistance levels. Okay. The ideal trade here for the conservative trader would get in above 55 and ride this thing up to 61. However, if you're a little bit more aggressive, I think you can get in above this double top with a small part position. So leg in. So this is just, for me, this is just a stock trade. It does have options that are decent, so you could go that way. I'm just thinking as a stock investor right now, part position here, a little break above the 54, add to a position there, and then once it breaks that 55, you could finish off the position, and you've got some clear air up here. You may have a slowdown maybe at 57 and a half, but I still think just the way this ran down, you'd get through there. So just a little different idea here where you could really scale in. If you're wrong, let's say maybe you break your position down into quarters or fifths, you get in with 1/5 of your position here. If you're right, then you can get in your second, fifth here, and obviously you're moving your stops up as you go. And then if it breaks that 55, I would complete the rest of the position, the full position there, and go for a ride here. So I really like how this is setting up. Like we looked at, energy's poised to break out as well, so that's going to help here. We're getting through some earnings. I know the earnings are for XOM. I think that's Friday as well. So, if they had good earnings, you'd probably get a boost out of this as well. So just like I said, easy stock trade there, something you could leg into. And if you're wrong, you take a very small loss. If you're right, you've got some serious potential here.
Yeah, I like this concept. This is just a broader, teaching point. The idea that when a reversal is in its infancy, I dip my toe in the water, and then if it doesn't work, small, little tap on the shoulder. I'm not getting hit with a 2x4. Like I don't have a ton of exposure, but if it works, I like how Greg has thought through this, right? He's playing chess. He's thinking multiple moves ahead. He's building out this trade. Going to get in on the first break. I'm going to add to as it builds in strength and break subsequent resistance levels. I think just conceptually, I really like that idea. And it's a cheap enough stock too at $53 that you're not breaking the bank by buying shares. So I have no problem with this. I think, we were quite excited about the energy sector and bullish on it going into this year. The last 6 weeks, energy has really had a nice retracement, but starting to wake up again. And that I think is worth, you got to take note, right? And really, Greg, you got your pick of the litter here, right? XLE, XOP, oil services, ConocoPhillips, Chevron, Exxon. I mean, they all look pretty darn good. It's just a matter of what route you want to take, right?
Yeah.
Yeah, totally agree. Totally agree. Okay. I don't know if I had anything bad to say about that one. I just thought the only thing I share your uncertainty as to why they're splitting this earnings stuff. Might have to do some due diligence on that. The saving grace, though, is earnings have not mattered for energy companies. They've been nothing burgers for a while. So
even if you look back at the last few here, these candles are tiny. Like there's just nothing going on here. So like you said, I'm less. Typically I don't trade things through earnings, but when you've got some history here. And at this point in time, you're probably possibly still only in a part position, which I'd be completely okay with. So you don't have that gapping issue. You're in a part position, so your risk is lowered to begin with. I personally don't have a problem with it.
And I feel like of all the sectors out there, like technology, you've got a lot of disparity between the outcomes on earnings. One company does really well and gaps up. Another company doesn't do well and gaps down. I feel like with energy, the energy sector in particular, it seems like they all trade as one, right? Like you don't tend to get like Conoco's killing it and Exxon's getting killed. No, like they all tend to move in sympathy, don't they?
Well, if you look at it, so I pulled up the XOM chart here, right? It looks exactly like the ConocoPhillips chart to me. Like it's almost, and then you look at XLE, it looks exactly the same. And then you look at the the crude futures. Wow, it looks very similar. Now a little bit, obviously some nuances. I think the crude futures look a little bit stronger than the few of the others. But yeah, they're all kind of lockstep there. And so yeah, I think you're right. If we do get that break, like Chevron, if I put these two charts side by side and took the ticker symbol away and hid the price, I don't think you could tell the difference between this and Exxon. Because actually, I actually even think the earnings is on the same day. So you know what I mean? Like it's just that's the way it is. So
well, and I think it's encouraging today that not to belabor the point here, but there were some really if I sorted my liquid stock watch list by percentage change, it's littered with energy companies at the top. And so like NOV for it, just real quick, National Oil of Varco, NOV. This is a company that had earnings and really nice pop, right? And that seemed to like buoy the entire sector. HES, another one, had a really good response to earnings. So what it does when you start to get the first movers on earnings or the first guys that step up to the earnings plate, when they're killing it, it's almost like the guys that are coming afterward, investors are like, okay, you're going to be fine. I'm willing to bid up your stock now in front of earnings because those other guys did pretty well. And so I'm going to give you the benefit of the doubt. You're going to do well. I feel like that's what's going on in the energy sector right now.
Yeah, I agree.
So, all right. So we like energy. I'll pivot to another sector, but I concur with Greg. I think there's plenty you could do there. Let's talk about gold, Greg. I think there's a couple different ways you can play this, but let's take a look at GLD. I'm going to go for the more boring approach here. I like how gold is sticking the landing so far on this pullback. We talked a little bit about this in the halftime report. You had the double bottom, you had the breakout, you broke the 50, got a little extended. Now you've pulled back, sitting at the 20. So you've got this bull retracement or kind of bull flag type pattern in GLD, in GDX, in a slew of gold mining stocks. I think there's a couple different ways you could play this. I am going to use GLD. It has really low implied volatility, so options are dirt cheap. And I don't think I want to do like a super directional trade here, Greg, because I don't know if gold's going to wake up and if it's just going to rip. I'd like to do a trade where it doesn't require GLD to move that much. And I also want to take advantage of the fact that out of the money call options tend to trade a little bit more expensive than at the money call options. So I want to do just kind of a conservative bull call vertical spread, maybe risk one to make one, and then just give it a month or two. And I think this could get up and hit my profit target. So with the stock around 167, I'd go out to June. And I would probably be looking to buy maybe around like a 165. See what a 165, 170 would do for me. Okay, you're paying 225 to make 275, and you're almost at your break even already. So pretty balanced bull call vertical spread. Just asking for this to get to 170, which is not that far away. That I think would be interesting. If I wanted to be a little bit more aggressive, I would just raise that higher strike, 171, 172, maybe push it a little bit further out of the money. To show the implied volatility skew there that works to our advantage with a bull call, go to the option chain in June and add implied volatility as one of the columns. So you can either manually switch it out or just change the layout.
So I'll do here, customize. And sorry, you wanted implied volatility?
Yeah. All right, so you'll notice like you take the at the money call, like the 166 or the 167, the IV is 12.5. And then as you go further up in strike, you'll see that the up meaning down, up in strike down in, you know what I mean, 170, 175, 178. You'll see the IV bumps up a little bit, right? So out of the money calls in GLD trade with a little bit higher implied volatility than at the money calls. And what that means is you can build a bull call spread for a little bit better risk reward, because it's like I'm buying a cheaper option and I'm selling a more expensive option. In contrast, for those that have been here for the last 30 minutes, IWM is the opposite. So if you put in IWM, Greg, unfortunately, the upside calls trade cheap on IWM. And so if you look at the bull call spread that we were playing with earlier, like at the money versus $10 out of the money, you were buying the 230, paying 22% vol, selling the 240, only getting 19% vol. It's still an okay trade to do a bull call spread. You just don't get the kicker of the overpricing of those out of the money options. So just in general, the way that they price gold options, the bull call is a little bit more sexy than a traditional stock ETF. Anyways, long-winded here, trying to mix in a few different lessons, but the point is, I think this is a very straightforward way you can play gold. I could also do a bull call diagonal, Greg. We won't go down that rabbit hole, but if I wanted it a little bit more theta, I'd go that route too. I just like the pullback. For me, again, bull call vertical. You could wait for a break of today's high if you wanted to, but I thought the candlestick was compelling enough today that somebody could have considered pulling the trigger.
Yeah, so we tend to look at these flag patterns a lot. This is actually something I've adopted, probably in the last couple of years. This flag pattern, it was never really something I paid that much attention to, but it's had a lot of success recently. These flag patterns have worked out quite well. So I do like the way it's setting up. I do like the case for gold overall. I do like that implied volatility boost or kicker that you're talking about there. This thing's just not done doing what it's got to do as far as I'm concerned. There's just more upside to gold. So the question is, how do you play this? The GLD is a bit gappy here. But as you said, there's lots of other ways to play at GDX and, you know, any of the other companies as well. Yeah, I just really like the setup. I think, you know, short term 170 is doable. Longer term, you're looking at some resistance at 175. So I think that's 100% doable. Yeah, fair enough. And again, it's kind of been the theme of our picks so far. There's no problem with earnings. We don't have to deal with any of that issue. So, you know, the only thing would be, this probably would be affected by, you know, if the other gold companies had bad earnings, this might be affected by it, but I wouldn't be too concerned about that overall. So, yeah, I like the trade. No issues here. Big, strong candle today. Yeah, I could see the trade playing out just exactly the way you built it. So good job. Well done.
All right, give me a joke.
All right. Gotta get so many of them here. All right, we'll go this one. We'll go the nice one. My grandpa always used to say, as one door closes, another opens. A lovely man, terrible cabinet maker.
Okay.
I'm giving you all the fluff right now.
That was a dad joke right there.
Oh, it was. Yeah, I got some dark stuff coming, so I thought I'd just lighten up the audience before I bring the hammer down.
There you go.
Yeah.
All right. What are we on? Round 3.
Round number 3. Lucky 3. I'm gonna go big dollar stock here. I think this has got some potential to it. The Lululemons. So easy to see here, high base into a known resistance zone. I like the break of 345 here. You know, it already made its turn a while ago. If I extend this to the right, you know, it took its lumps, you know, got out of the woodshed over here, and it started to make its higher highs, higher lows. Love the high base that we got going here. It had 2 days that were very, very aggressive. It's kind of flattened out now. You know, getting a little bit of energy there. What I really like about this, and this is again going to be one of those very basic trades. I just like the bull call spread here. You know, I'm expecting a pop on you know, on this above the 345. I want to get above this resistance back here. Okay, and if you get in at 345, there's absolutely zero reason why it doesn't get to 360, and beyond that, you could be looking at 380. For me, I like the setup of the bull call. Now I went short term, okay, and the reason I did this is because it moves pretty good. It's $7 a day. We're only looking at a $15 move here to get to 360, so that could happen very, very quickly. I looked out at the June bull call, and I wasn't happy with it. So I'm actually looking at May 21st here. You do have earnings coming as well, but it's not till June. I think it's like June 3rd or something like that. So June 3rd. So I looked at the short term here. I know theta is going to be working against us, but I think if you get the trigger above 345, I think technically you can get there pretty quickly. So what I looked at was buying the 345 and selling the 360. You're looking at about $380 in the trade, $386 in the trade, and you got a potential of 1100. So this is one where you could set it and forget it if your risk tolerance was 380 or more, and you're almost a 3-to-1 here. You're not quite a 3-to-1, but you're a solid risk reward here. And like I said, I think this thing is doing all. It's, you know, just like Tom Cruise, making all the right moves. You know what I mean? It's just going sideways, building up energy. It's like I said, it's taking its kind of lumps back here. It's working on the reversal. All the moving averages are starting to curl in the right way. We've got a solid resistance at the 345. And if you get above there, like I said, I think you're clear to 360. And even beyond that, 375, 380 is in play as well. So if you got to the point where, here's the thing about going more short term, is if this thing got to the 360, if we go back to the analyze tab here, if this thing got to the 360 here, you know, because of the time decay, you might not get this purple line close to that blue one. But if you get to that 360, you're at your max gain. So what you could then do is roll this out and up again, right? So you could go look at the June. If you thought it was going to go from 360 to 380, you could then look at another spread there. So like I said, short term, kind of going against the grain a little bit here, but I just really like the way Lulu's just starting to set up here.
Would you wait for 345, or would you wait for the high of the last 4 days, which is a little bit closer?
I would be worried. This was a pretty solid resistance back here, right? So we had like 4 or 5 touches here. So as a conservative trader, I'd wait for 345. Now that could throw a wrench in the works with the short timing. I looked at weeklies. I really wanted to do weeklies, but their weeklies are not. I wanted to do June 4th, but their weeklies are not liquid enough. Now, I should qualify this. I looked at this after hours because I would prefer to do these weeklies, but the volume and open interest doesn't really meet my criteria. There's just not enough of it here. So that's kind of why I had to choose between either the May or the June. And I just like the way that the May was setting up. Now, if it continues to trend sideways, that would void the trade for me. I just don't want to. I don't want to get in here at 340 and then have this thing hit 345 and stall on me.
Okay, and if I get in at 345 with a short-term spread, do you think that you'd put a stop under the low of this base then, so you get out quick if it doesn't work?
100%. Yeah.
Yep.
Yeah. Nothing wrong with that. Like I said, you know, I like this setup in the fact that the way it's set up now, like let's say, because really. It could trigger. So we're what are we? Yeah. So we're exactly 1 ATR away from triggering. So we could technically trigger tomorrow, which would give you enough time. If that's the case for me, 386 is in my wheelhouse of pain threshold. So I would have no problem setting and forgetting this. But I also think that, you know, putting a stop loss down here at around the 335 area there is a prudent move as well. You're 335, you're risking very, very little there. So
awesome. Okay.
Yep.
Yeah, I like it. I think it's clean, very clean pattern, very clean base, making it easy to build a trade around it. So it looks good.
Yeah.
Okay. Take a look at IBM.
Ooh, look at that thing.
We don't often throw love to IBM, but I gotta tell you, post earnings, I like to view earnings announcements as catalysts for new moves. They reinvigorate a stock, or maybe they cause it to move into a downtrend. I like to look for continuation patterns in the direction of the gap. Particularly when it gaps in the direction of the existing trend, right? So IBM has been waking up, had a great earnings announcement, really good response, and then takes a week to go sideways and lets the 9 EMA catch up. That's pretty textbook. I mean, honestly, the only thing I don't like about IBM is the IBM, right? Like if this was Apple, I mean, we'd be all over it, right? If this was PayPal, all over it. If there's some momentum stock, all over it. The fact that it's IBM, it's almost like, I mean, are you for real, IBM? Like, you're not just trying to be one of the cool kids. Like, you got to start trending now. So because it has for 5 years just been a choppy mess. So I think on the weekly chart, it's got a little bit of room to run. I'm willing to give it the benefit of the doubt here, Greg. I think that they're coming after it after earnings. So the high base pattern, again, is the reason for the attention here. From a strategy perspective, options are cheap. Earnings came out, implied volatility got crushed. Options, which were inflated, are now not. And so, you know, I'd love to do a bull put, Greg. I'd love to sell a 130, 125 bull put, but they don't pay you anything. So it kind of forces your hand to go somewhat directional when the vol is this low. Particularly on something like IBM. So I think I want to go directional here. And if I wanted to be a chicken in the way I did it, I'd build a diagonal and give myself an out so that if it went sideways, I still made some money. But I'm feeling lucky, Greg. I'm feeling like 145, 150, go out to June, you know, put a stop under the base. If it doesn't work, I'll get out quick. If it does, I'm looking for a run to 150.
So you're spending 128 to make 370.
It's dirt cheap.
Yeah, yeah. So this is a space anybody can play in, right? Which is good. So yeah, no issue there. I like the setup a lot. Call me chicken, whatever you will. I actually would go with the diagonal here, and it's just because of I kind of look at this recent movement before the gap on earnings there.
Sure.
This thing kind of just meanders, so I wouldn't have any problem doing a diagonal here. I don't, like I said,
Let's
I don't mind.
Contrast. I want to see how you would build it, and
Okay,
do a little side by side if you don't mind.
Okay, so here's the IBM your trade. So the way I would do this one here, we'll get rid of this one. I'll just throw this on here. So the way I would do it is I would probably go out to the July, give myself a little bit more time. 80 days is enough for me. And then I would buy either in the money or at the money. What are we sitting at right now? 144. Yeah, I'd be happy with I'll probably go the 145 as well. Buy that. And then I don't do the monthlies. I like weeklies. Now, again, I'd have to look at these. Just thinking off the top of my head here, maybe selling every 10 days or so. Mm-hmm. Let's see, what's my expected move is $4. So say 149-ish should be a little bit far away. I'd probably sell the 147 here, get that debit down to about right around $3. And get some theta out of that. And let's make sure I got this chart properly here. I'm going to take that one off. And look at this bad boy here. So this one would be one where the graph doesn't show you what it looks like when if you get to that level and start rolling. But yeah, what I'd be looking for here is that slow drip of theta. As well as having the potential for rolls out of this, right? So you're not that far away. I could probably slide it out a little bit more, but yeah, for me, this one would be just one that drifts, right? Like looking at this 6-month chart here. This thing drifted for like 2 months, better part of 3 months even. Yep. February, March, and into April, and that's, like I said, just before the volatility of beef earnings. The last time it gapped or did anything weird was again on an earnings announcement, and it drifted before that. So if it stays true to its personality, it could drift, and you could get to that 150 mark. By the time it did that, I probably would have rolled this at least once or twice by then, and still had an opportunity to collect some theta. So that's how I would play it.
And I don't mind that this risk graph isn't as bullish because it's a 7-day time or 9-day time frame, right? Like if you were buying 3 months and selling 1 month, you might say, I want to skew it a little more bullish. But you're right. You're going to be able to adjust it in the next 10 days if it does get up to 148, 149, and it's pushing too high. So for the time frame we have, yeah, I don't have a problem with it.
What I do like about it too is look at the volume and open interest on this. So when I looked at the options for Lulu, the weekly options were not good, right? Yep. Whereas IBM, there's boatloads of contracts here, even with the weekly options. So this is one that you could sell the credit and not have an issue with getting in and out of it. So yeah, that's the way I look at it there.
Good. Yeah. So 2 choices, nice little high base, play with a diagonal or a vertical. Good.
Either one is decent. All right. Joke.
Yeah, joke it up, man.
All right, we're going a little darker now. My wife beamed at me with pride and said, "Wow, I never thought our son would go that far." I said, "This catapult is amazing. Go get our daughter."
Look, I've thrown kids before. That's not dark at all. I mean, that's just a day at a normal.
That's standard parenting.
That's right. That's right.
Coming from the guy who has no children. Anyway.
So yeah. All right, round 4.
All right. Okay, I gotta flip a coin here. I'm gonna go to the other side of the fence just because that's who I am. I'm gonna go bearish, believe it or not. The old bear. All right. Welcome to Schneike. This one here is your classic in all my investing terminology. your classic bear retracement. So we're putting in lower highs, we're putting in lower lows. This thing just kind of looks ugly to me. We come right up to the 20 MA there. We put in this, doji candle yesterday. Now we got this big old red ugly candle today. I think this thing, it closed below the 9. I think this thing's ugly, and I think it's going to get more ugly. I think we're pushing back down to here, probably about that 125 level there. So you could play this two ways. I actually just had I believe fully that this will get back to 125. It's just that because of the market that we're in and everything just seems bullish and bear picks seem hard to find and all this kind of stuff, I kind of wanted to go a little bit different on this. And I didn't look at implied volatility, but sometimes that doesn't matter to me. What I looked at was, can I do a bear call spread here and get enough credit out of it? And I actually found one that I liked. So with Nike here, I did the bear call. I believe I did 30 days. I remember correctly, the 28th of May. I was able to get up to the 38, which if we look on here, 138 gets us above all of this stuff here, all this double top and all the moving averages. So looking at the 138, I'm going to sell the 138 and I'm going to buy the, what did I have there? 141, so $3 wide. And we got a 37-cent credit. So when I do credit spreads, especially out of the money ones, I need at least 10%, and I've got that here. Like I said, I'm above all this noise. It's showing me weakness. It has been showing me weakness for a while. I just don't see anything stemming the tide right at this point. And with that big, strong down candle today, that's how I see this one. So a very simple credit spread trade, a bearish trade in a very bullish market. So
pull up the trade one more time.
Yeah.
The May 28, 138, 141. Okay. I have zero problems with that. I mean, I think this is a smart way. If I need to add some bearish exposure to my portfolio and theta, yeah, I like the setup. I like the trigger. It's been weak all year long, right? I mean, it's kind of been making equal to lower highs all year long. Nothing not to like on this one. Good trade.
Yeah, I use the 20 delta as my short strike. So obviously I'm giving myself a very, very high probability that we're going to stay away from that strike price. So,
and the other thing you said that I like is I don't care as much about implied volatility if I can get the premium I want to get. What it illustrates is they're kind of one and the same, right? So I'm not looking at implied volatility first and then passing judgment and then going to build the trade. I'm viewing implied volatility through the lens of how much money is actually in the options because they go hand in hand, right?
Yeah.
You saying there's enough premium in this bear call to make it worth it to me is synonymous with saying the implied volatility is high enough, whatever it is, it's high enough for me to be able to build a trade that makes it still worth selling the options, right?
Right.
If it wasn't high enough, you wouldn't have got the 10% return far enough out of the money.
That's right. So, and that's the thing. The takeaway from that is to stick to your rules, right? So if I'd have built that trade and I chose the 20 delta and it was only paying me, 26 cents or something like that, I would have passed on the trade. I would have said, move on, right? So yeah, good point there, Ty. So
okay, next one for me is AXP. Credit card providers, Visa, MasterCard, Discover, Capital One, they've all been pretty good. Yeah. I like this breakout in AXP. And I think if you look at the weekly chart, I believe this is a breakout to all-time highs. You got earnings out of the way, so they liked the earnings announcement. Did they? Let me see. Was that pre-market? It gapped down on earnings, traded higher, and it's gone up ever since. I kind of like that even better sometimes, Greg. When something falls on earnings and then gets bid up immediately, it tells me that dip buyers are like, no, we like this a lot. You bozos who sold pre-market are, bozos, and we're jamming it higher. You're taking out, what, a 2-month base? And I like the volatility in XP. I mean, this thing tends to move when it wants to. So implied volatility is dirt cheap. The IB rank is, second percentile. I feel about this the same way I did on IBM. I feel like if you want to go directional, do a bull call vertical, buy the 150, sell the 160 out to June, keep it simple. But at $150, it is a low enough priced stock that you probably could create a fairly compelling bull call diagonal as well. I have zero problems with either one of those trades. I would structure them similar to what I just, what we've done in the prior ones. The vertical for me would be June 150, 160. Diagonal, you could do something like Greg does, but I'll leave it there since we're short on time. Greg, what do you think?
Yeah. Yeah. So I actually looked at this. This was on the short list of my trades as well. Yeah, you can't argue with this. Head and shoulders, inverted head and shoulders pattern here. Breakout today with lots of strength coming out of earnings, gap up. Just you can't argue with it. And then you look at XLF, and XLF's a juggernaut, right? So this thing's breaking out again. It's just been good. So like look at this slope. Look at the slope of this run in XLF. It's been crazy. So yeah, zero problem. So, all right. Quick joke here. Let's see. I decided to kill off some characters in the book I'm writing. It would definitely spice up my autobiography. Told you we were going dark.
I like that one. All right. Very nice.
All right. Finally. All right. I'm going to go with, I'm going to go with my LVS here. So past earnings, no problem there. Kind of a bit of a, we had the beat down here. I would say we're just in the early stages of the reversal here, from the drop from March. Showing some pretty good strength after earnings. Earnings didn't seem to be great. They were actually a little bit higher loss than they thought, but this kind of all falls into that reopening deal. Just that whole kind of concept, if you will. I like this because it's got above the 2 moving averages and it's poised right at the 50 MA there. So it didn't get above there. I would have preferred a close above there today, but I'm okay with that because the trigger is really not going to be until after 62 anyway. A couple of different ways to play this. You could play it with stock. It is cheap enough depending on the size of your account. You could also look into, I think, what did I have written down here? 57, 54. What did I have there? That don't make no sense. All right, let's just build this out then. What I would be looking at here is a bull call. I think you get to 64 pretty easily as a target. You're only at about 1.5 ATR, so you can build up that trade easy. Buy the 60, again, go to the June, buy the 60, sell the 65. You're in her for $200, a little better than $200. You're risking 200 to make a little bit more than 200. So kind of a 1-to-1 deal there. I just like it because if it breaks the 62, it's an old resistance and you're above that 50 MA, and traders like to be above that 50 MA. They kind of make their decision about being bullish. And this is just a classic reversal pattern to me. We've made the turn with today's candle. We need to see if it will finish the turn by getting above that first resistance. Now that's the first target. If it got beyond the first target, you could look at, getting around the 67 mark as well. So there's potential for a second push. I think you might run into some resistance at that 64 though.
Yeah, it's a good example of there's 2 types of breakouts. We usually tend to emphasize the horizontal support and resistance breaks. But there's a lot of traders that do look at trend lines, and when the trend line breaks, they view that as an actionable entry point. And it often gets you in earlier, right, than waiting for the horizontal pivot to break. So I like it. I like how it corresponds with the 50 MA. So looks good. All right. Awesome. Final one for me. This one might need a little bit of time, but let's talk about it. Take a look at Skechers.
Skechers.
SKX. I was looking at this. I'm like, Skechers, Crocs, and Foot Locker are all just killing it. It's like, that's where those stimmy checks went, Greg. You thought people were shopping. They were buying a new pair of shoes. Okay. I read up on Crocs today, and I'm like, I've never worn Crocs. I'm feeling the urge to go buy Crocs just because I feel like I'm the odd man out. Yeah. That's not even counting all the crap in our Slack channel. I'm talking about just like regular news outlets, you know, talking about how well Crocs is doing. Anyways, I find this Skechers part just really compelling. Their earnings blew it out. The stock gapped up probably way too much. It's backing and filling. I feel like you got to be interested in this dip, right? The fundamentals were killer. The odds of a stock topping like this, I think, are pretty slim, right? I think it's what's the phrase? Too clever by half to say, oh, it priced in all the good news in one fell swoop. Now this is going to go down for the next 6 months. It's like, why? Like, what would lead you to believe that? Fundamentals trend is good. Earnings growth is good. The trend is pretty consistent. Will it fill the gap? Maybe. Given how much it gapped, I prefer it didn't. I prefer they buy this dip before it fills the gap. At any rate, I think this is a viable dip. I like the strength. It's down a few bars. It's down enough with this doji today that I'm starting to get interested. I would prefer a couple more. And given the choppy nature, the just slow, gradual rise of this stock, I would be thinking, Greg, more like bull call, diagonal, poor voice covered call. The IB rank is 0. That's where my head's at in building a trade on this right now. Okay.
Yeah. So for me, you and I've always had this this kind of difference of opinion. I actually like the slowing momentum of this, and I see why you're looking at it. It would have to convince me with a green candle over here before I would get involved. Stock wise, I think this is okay. I haven't looked at the options myself. I'm assuming you have, because that's who you are. Yeah, you could build something here. I'd probably end up going out to July, I think. Yeah, so the options are cheap enough as well, right?
They're not
you
bad.
Buy that, you could sell some premium against it. You could go to the monthly, you get 3 rolls out of it, or three sells out of it. I might, like I said, kind of go, every 10 days or so. On the weeklies, provided again, it's got to have
liquidity's not bad on the weeklies on this too.
Oh, is it okay? Well, that would be the deal breaker, right? So you look at it, yeah, you've got a few hundred contracts littered in here, so yeah, no problem there. So yeah, I think that would be a decent setup for here. Like I said, for me, I'm just one of those traders where I need to really see that. I need to see that close tomorrow and be a green candle before I get involved. I see what you're seeing. Like I said, the bane of my existence is always being early. You know what I mean? I've been chopped so many times when I've got in early. So I think you gotta, like you put the disclaimer out when you started talking about it. It needs a couple of days to cook for sure.
Yeah. And in this situation, I don't think we disagree. I think sometimes when I'm pitching a setup, I take for granted and just assume that the listeners understand all of these are contingent upon them triggering, right? Because I could turn it the other way. I could say, Greg, you know what's the bane of my existence? Seeing a setup like this 2 days late.
Yeah,
right?
Fair enough.
And so I'm like, look, I'm tired of seeing 2 big green bars after a pullback and saying, yeah, I guess I should have caught that beforehand. I've been prepared for it. So we're on the same page. But yes, good feedback. Give me the last joke. What do we got?
All right. Why are redneck murders the hardest to solve?
I don't know, but I feel like I'm going to like this one.
All the DNA matches and there are no dental records.
All right, I'm stealing that one. Why are redneck murders so hard? Hey, look, apologies to any rednecks without teeth.
Yes, this is all in jest, everybody. Let's not raise the offended flags here. But anyway, I got one more joke that I want to go to before we go here. When single women get to the age of 50, they tend to adopt lots of cats. This phenomenon is known as many paws.
When they get to what age is it? 50?
50, yeah. Now I've offended everybody pretty much, all the rednecks and the single ladies.
Greg Holmes, ladies and gentlemen. Greg Holmes.
All right, Tyler, that was a ton of fun. Of course, I'm the winner. You know, that's how it works. But anyway, we're all winners here. So
Yes.
That was a lot of fun. Enjoyed that, and yeah, we will see y'all on the next Trade Masters for sure.
Yes, well done, Greg. Thanks, guys, for showing up, and keep up the good work with the trades. We'll see you. Oh, and by the way, if you're joining us and you've never seen Trade Masters, come. This is a little taste of what we do at Tackle Trading. So come check us out, tackletrading.com. You get a free trial. These are the types of picks and setups and trade ideas that we throw out pretty much every single day. So we'd love to have you check us out. And with that, we'll see you at the next Trade Masters.
Yes, one more thing. I'm doing Traders Lounge at night in 30 minutes. So for all you pro members, slide on over and let's talk turkey. All right.
There you go.
Talk to you later.